Happy Sunday, Twitter fam. Captain Jim James here with your weekly brief for December 13th, 2021. So I want to start off by saying that I hope that you get this video before morning. I live near where those or close enough to where those tornadoes were that we had windstorms that wound up knocking power and internet out to us intermittently over the past 2 days. So I've made this video I think 3 times at this point, and I've had uploads fail. So hopefully you get this video. And we're going to start this video off by looking at the economic calendar. And we know that we have got no events on Monday. We've got PPI on Tuesday. On Wednesday, retail sales. Thursday, claims and continuing claims. Nothing on the docket for Friday. I'm sure at this point, everyone knows about the FOMC on Wednesday, or at least the presser at 2:30 in the afternoon. That's really what you need to concern yourself with. Jerome Powell is going to come out, hold a presser, and talk to us about monetary policy heading into the upcoming year. And ad nauseum, I'm sure that everyone is talking about this everywhere. Sometimes you get in the rabbit hole, or sometimes you get in that box and you don't know what to believe anymore. When in reality, as an investor, a swing trader, a day trader, well, the only thing you really need to know is, are they going to increase or accelerate tapering in December? And what, if any, rate increases we get in 2022? We know we have one bank that was saying that we're not getting any rate increases. We have another bank that's saying we're getting 2, if not 3. A bunch of other banks believed that, and we actually priced in 2 rate increases in 2022. So what does that mean? Well, we know that Jay Powell has told us that he would telegraph before any major announcements during this time period. We also know that the market has been kept up during this time period. We also know that the president came out and said, hey, inflation's going away. Shortages are going away. You can see it. I mean, to their credit, somewhat, there have been lesser gas prices. Some of the shortages are relieving. Some people are going back to work. Does it need to improve? Yes. Did we see worse CPI numbers this week? No, we got the expected numbers. I was expecting even higher. They didn't come. So you have to somewhat give them the benefit of the doubt. You know, if those numbers were worse, that the potential for rate increases was definitely on the table. So at this moment, I'm going to give them the pass. And I'm going to expect on Wednesday that tapering runs on the same schedule. I'm going to expect that if we even get any rates guaranteed on this FOMC, that it's no more than 2, possibly even 1 with a revisit next year. And we might not even get rates announced at this FOMC. And either way, that's all priced in. So let's say they gave us the worst news ever. It would have to be 3 rate hikes, aggressive tapering into December. I just don't see it at this point for what's showing in the market. It's not priced into the market at this point. That would be a move that I would have expected pre-COVID. So what do I do in this market as a trader? Well, I'm going to trade the market that's in front of me with what we know as supports and resistance levels at this point. And then I'm also going to be putting some protection on whenever we're at highs from now into FOMC. My expectation is that we're going to trade up this week, and then we might fall back, right? We may come down to a support level and then go to all-time highs into the 31st of December. That's what I think is going to happen. That's how I've been trading. I think that most of you are following along with me trading in the same fashion. Now, while this is going on, I have to make a note that I know that there are index bears getting wrecked out there, and I know that there are bull or stock bulls that are getting wrecked out there. If you start to look at the whole market, there is a great rebalancing that's been taking place leading up to our OPEX this month. And so what you're seeing is that COVID trade is being taken for profit, right? The banks are taking profit on the COVID trade. They're propping the market up at the same time. They could have dropped the market and kept it dropped right into FOMC. What happens, though, in that trade is, let's say we don't raise rates on Wednesday, you start to see more attractive stocks, even if it's only for 2 or 3 weeks, and we can pump up this market. You know, Tesla could hold the market up if Apple sold off. And I had price projections of Apple hitting 190 before end of year. I think that's still possibly on the table at this point. So I wouldn't let this market go just now. And then you would be surprised if we have a down, let's say we have a down January to March, and Apple eventually does sell down, Tesla and some of the high flying big tech stocks sell down. In springtime, you're going to take a look at the stock market and find that everything has been rebalanced, that profits have been taken from your favorite stocks, that big tech is now at a better price, and the market was able to take profits at the end of this year. So that's what I see happening. I'm going to trade that happening. And with protection, I think I'll trade right through all this with no issues. And I'm going to make another video later once I know for sure I have power so that I can talk about some individual stocks with you guys out there so that you feel more confident and safe. If you're one of those long-term investors, the only thing you need to be doing right now is hold your position that you're in and take longer protection out, 1 to 3 months. If you're a day trader, you should be grabbing protection along the way and respect established support and resistance lines. Now we're going to look at the SPY chart over here, and this is the 1 month chart here. Now looking into last week, right, we were in balance last week, and we knew where support was. We knew it was between 465 and 466. We knew that the buy the dip was really down at 4640, and then we could go deeper to 4600 without volatility until we hit 4500. We know we're in a positive gamma environment, that the market should go up, that liquidity should step in. We know where the sellers are hiding. We knew they were above at 470, but until Friday, we also know that the hero indicator swooped straight up into the sky, which meant that dealers were removing higher hedges into the close. And that was important. When we bought here on the 7th was important, the 8th was important, and then specifically on the 9th, what happened was we were selling off. And we talked about on Twitter, I'm going to buy that close, even if it's the last minute, no matter where it is. And I was hoping for 4640 because I'm a greedy bull. I didn't get it, but I did get the trade on at the close. And sure enough, we traded right up to this open right here into Friday. And that's where the cards were tipped, was the open. Because when we sold off, we picked it right back up at that same support area. And we traded up the rest of the day straight into the close. We ended up slamming on another 40 points right at the close on Friday. So Thursday's or the whole week's action combined to the action into close Friday leads you to believe that we're going to make a run at all-time highs. And so what does that mean heading into Monday? Well, it means we're going to go to a smaller time frame here. And that means, let's see if we can get this closer. That means that we're going to try to make a run at 473.53. It says 51 here, but we know that the cash all-time high is 53. But we're going to make a run at that. If you're a bull, you want the banks to do the work. We talk about this, right? We run it up to where we come to resistance. We let the banks take us over and let it rest on support. If you're a bear, you're looking for a reaction here. If you don't see a reaction, you can't take that short. You want to see a reaction that it's rejected, right? And even when it's rejected, you want to see that rejection 2-3 times. If liquidity comes into the market on Monday morning, picks this up and sends it over, you're going to be looking for support to be made and then another move up. This is when you're a bull, you would pick the SPY back up and trade higher past all-time highs. I don't think we get past 476. If we do, I think we might even trade sideways up here heading into FOMC, but I think we're green this week. Now let's say we reject off here. You'd want to see 2 to 3 rejections for us to start to test lows. And that low, though, is going to be deep. It's going to be somewhere around 4,600 as we head into the rest of this week. So this is an area of concern for bulls. This is an area that bears are going to want to short. And in all honesty, if we look at on a larger time frame back on this 1 month, it wouldn't surprise me to see us trade up here, sell off, and then trade back up to all-time or to that 480 mark we're all looking for into the end of December. So that's what I'm looking for. I'm looking for a move up here. Let's say we get up here to all-time highs. We might make it slightly higher. We get rejected somewhere here, can't find support. We sell down to this 460 number, possibly 4640, and then we wait for the announcement from J Powell on Wednesday. And if all is good, we trade back up to 480. If anything ugly comes out, we'll start trading down to the depths of hell. That's all I've got for you in SPY. We'll look at the IWM right now, the Russell, the RUT, RTY. And we talked about this earlier or later last week where I tried to explain to you that the RUT and the IWM is rate sensitive, but one of the tipping points in the cards on the RUT was that the RUT would switch to negative gamma somewhere down here at 213 and would almost be forced to trade down to 205. So if that were to take place either last week or even this week, it would crash the SPY and the Qs. And we're getting the point right now where they're not allowing that to happen. The banks are not selling out just yet IWM. So what would you expect out of IWM this week? I'm going to expect it to trade up to 222 or 223 heading into the FOMC. If FOMC is bad, we'll trade down to the depths of hell at that point. Otherwise, it's going to be staying up. Now the Qs, NDX, Nasdaq, the Qs have some bigger problems. The volume profile on it is not pretty right now. And what it is implying is that we're going to grind in this area in here. We're probably going to be down to 396 and up to 399 a couple times this week. And that implies that we are whacking a lot of stocks in tech. It also implies that some other stocks might be taking over to hold the market up. Where you see how high Apple is, we gave projections of almost 190 there. It could probably go there before selling off, but in reality, it's probably close to the high, or it's close to the high on it right now. We'll get into Apple here in a minute, but 190 is not out of the picture for Apple. A pullback if we don't make all-time highs in this run is in the cards. And specifically, let's say Apple goes to these crazy highs. Let's go to Apple real quick. I'll show you that one first. We're going to look at Apple, and one of the important things about Apple, that this trade, is that you want to look at Apple. Let's look at Apple right here. And what's important about the Apple trade is this is way back in 2020 in March. And I want you to see the direction of Apple moving up here. And I really want you to see is that, if you had bought the high here on September of 2020 and you bought the low here, you would be right at the same price at 139. So to wait an entire year for Apple to go up to 179 is really not that crazy. So one last push up to 190 on the table. One more thing, let's say Apple begins to sell off and another stock like, let's say, Facebook starts to pick up, or Netflix starts to pick up because they're coming into winter, or Amazon picks up, or the three of them do, it could carry this market through into January 1st, no problem. And let's go look at Tesla real quick, because Tesla might have one last breath in it as well. And we talked about Tesla. You can see here, see this right here? See this consolidation? You got another bounce down here and one last push up above into April. That doesn't look like it's out of the picture here for Tesla either. So you saw that we did this. We traded this once already. You guys traded this with me. It wouldn't surprise me to see Tesla trade up, sell down below into this support area in the 900s. Let's call it like 950 to 900. Get picked up for one more trip up before end of year into the 31st. So can this market stay irrational? Yes. If I start to look at the market as a whole, it's really starting to look it's really starting to look more like the market is fully manipulated. It's really looking to me like we're rebalancing. It looks to me like when we head into January, we might have the whole market sell off, let's say. By the time we get back into March, you'll have all these stocks that'll be attractive again for people to long into next year. You can see it here. This is like the movie where the oil driller sucks the milkshake of the guy next door, right? The bears were expecting all of these stocks to crash at the same time. That didn't happen. The bears were expecting for just Apple to go down and crash the market at this point, but in reality, there's a few others out there that could prop this market up when Apple does come down. So this lends more credence to normal pullbacks end of year, normal profit taking, and then literally the market to be ready to be bought again once late winter comes into effect. So the only last thing I would leave you with is if I put some protection on to save me or to protect me if we sell off real crazy, I'm still going to be green. That's it. I'm still going to be green. If I lose this one trade this week, I still haven't lost this year. I haven't lost this week nor last week. I could make one bad trade this week right now and have made 5 great trades last week that you just can't. And I can turn bear in a dime. So I would play this market as it's in front of you. Put the protection on. If you're an investor, you can sell calls. You can buy outside the money puts for a few days out. You can buy outside, or you can buy in the money puts that are 3 months out. You wait for the presser, and you can cut one side loose. And you can even just stay on your hands. You can stay cash gang, wait for that presser on Wednesday, and pick up the market from there in the direction that it's going to take. Good luck to all of you heading into tomorrow. If you don't see me in the morning, it's because I don't have internet. But if I do have internet, I will live stream with you beginning at, let's start at 8:30. Well, you know what? At 8:30 tomorrow morning, I'll chart out some tickers for you so that we can get you guys what you want to have or need from me. And I will try to put a video out for Tesla, but you can see where my buy zone is here for Tesla. I'm a buyer anywhere down here. I'd really like to see Tesla come down to, let's call it 920, or there'll be buyers up here. So I'm a buyer between 913 and 945, at least once more the rest of this year. And I'll do a more in-depth video as we head into tomorrow and Wednesday for some trades on Tesla. And if this does dip this low, I would expect it to break out of its resistance up here, this channel that you see right here, okay? And we'll break above that for one last push, end of year. Happy holidays.